Welcome back to the cryptowrld channel, everyone. My name is Josh, and today the Bitcoin price entered this area of maximum opportunity as the weekly RSI enters into oversold territories for the first time since the end of the 2018 bear market. And of course, this is happening after we experienced an extremely volatile move that was predicted by the Bollinger Band days in advance. But what is really interesting is despite the recent Bitcoin crash, the Bitcoin whales over on Bitfinex have not liquidated their long positions. In fact, they're adding more money to their long positions. And this is happening at the same time as the Ethereum short positions on the same exchange are entering into all-time low levels, which is very interesting once again. So I'll be covering all of that and so much more for Bitcoin and Ethereum in this video. And later in this video, I'll be talking about what's happening with Celsius, because this right here could be a growing issue for the entire crypto market. So definitely watch to the end of this video so that you don't miss out on any of this important information. Just starting off on the weekly Bitcoin chart, and as you can see right here, the Bitcoin price is clearly underneath the 1,000-day moving average, which is the green line, and that was coming in at around 28,500. And the moment we confirmed that weekly candle close below that level, we saw almost an immediate drop down towards the 200-week moving average, as I've been talking about in recent videos here on the channel. And this 200-week moving average is coming in between $22,000 and $23,000 per Bitcoin. And once again, if you've been keeping up with my recent videos here on the channel, especially in recent weeks, I've been talking about that $23,000 price target for quite a while due to how significant that 200-week moving average has proven to be time and time again throughout Bitcoin's entire price history. But something else to keep in mind is despite the 200-week moving average providing a lot of support for the Bitcoin price throughout Bitcoin's entire price history, in some extremely rare occasions, we sometimes get a capitulation wick below the 200-week moving average, which is why I am certainly not buying on leverage at this moving average. I'm simply accumulating more Bitcoin on the spot market, which cannot be liquidated. And of course, the Bitcoin that I'm stacking at around 22 to 23,000, I'm holding for the much longer term. I'm not planning to sell for many years to come, because even though it might not seem like it right now, this bearish time is only temporary, like all of these other bearish times. And just like the bullish times are always temporary. There's always another crash around the corner, just like how there's always another pump around the corner. And on top of the Bitcoin price retracing to that 200-week moving average, we are also seeing the weekly Bitcoin RSI entering into oversold territories for the first time since the end of the 2018 bear market. And before that, it only happened one other time, which was at the end of the 2014 bear market. So we're talking about the end of two previous bear markets are the only two other times where we've seen the weekly Bitcoin RSI enter into oversold territories like it is right now. So once again, that is just something to keep in mind as well. And also, if we look at this chart right here, which is still the weekly Bitcoin chart, but zoomed in a little bit and bring out the Fibonacci retracement tool from the March 2020 capitulation low up to the all-time high for Bitcoin, that gives us the 38.2% Fibonacci level, which is the second most important Fibonacci level, coming into play in between $22,000 to $23,000 per Bitcoin, right at that 200-week moving average. So basically, we have a strong confluence of different indicators all pointing towards around 22 to 23K, and at the time of recording this video, we are finding some short-term support around that level. And if you're looking at the daily Bitcoin chart, giving you a quick update on this hash ribbons indicator that I covered in yesterday's video in more detail. Obviously, we have now seen a capitulation in the Bitcoin price play out after we got a capitulation signal in this hash ribbons indicator. And once again, as I mentioned in my last video on the channel, if we see this signal drag out a little bit longer for another couple weeks or so, and potentially up towards around a month, which it normally does, then in that case, it would likely flash a blue buy signal, which is the signal that I'll be paying attention to, because historically speaking, this blue buy signal, when it shows up in the hash ribbons indicator, it is extremely accurate as a buy signal. But I won't be going too much into detail about this indicator in this video, because that's what I did in my last video. So if you're new to the channel, definitely check out my last video that I posted yesterday. And now giving you a quick update on the Bollinger Bands indicator on the daily Bitcoin chart. And obviously these Bollinger Bands are beginning to now expand now that we've seen an extremely volatile move, like these Bollinger Bands were suggesting a few days in advance before the move even began. In case you're new to the channel and you have no idea what this Bollinger Bands indicator means for the Bitcoin price, basically anytime where we see a decent size squeeze in this indicator, when these Bollinger Bands squeeze together, that's basically a strong signal telling us that we're about to see a very volatile move coming sometime soon in the Bitcoin price, like what we saw in early May. Just around the corner was an extremely volatile move, and just like what we saw around a week ago, just around the corner was another extremely volatile move. And the Bollinger Bands indicator itself unfortunately does not tell tell us the direction of that volatile move. Instead, we need to pay attention to support and resistance levels in order to determine what direction that extremely volatile move will play out. And once again, what I mentioned in yesterday's video was the fact that the Bitcoin price was losing that $28,500 support level and will actually forming bearish market structure right here in the shorter term, because as the Bitcoin price broke to the downside below 28,500, we actually came back up, retested that level and confirmed it as new resistance, which is a very bearish signal. And once again, I mentioned that in yesterday's video before this crash. But what is very interesting is despite the Bitcoin price playing out a fairly significant crash recently, the Bitcoin long positions over on Bitfinex have actually increased. They have not been liquidated at all. In fact, if you're looking at what we saw just yesterday and today, we've seen another 16,000 Bitcoin getting added to these long positions, which is equivalent to well over 300 million US dollars flowing into new Bitcoin long positions. And if you take a look at these Bitcoin long positions compared to the Bitcoin price here on the weekly time frame, right now these long positions are at all-time high levels on the Bitfinex exchange. So it is definitely worth looking at some other times in the Bitcoin price where we've seen these Bitcoin long positions on this exchange shoot into new all-time highs. And if you're looking at the last time that happened here on the weekly chart, that was in the middle of last year, more specifically around July 2021. At that stage in the market, these Bitcoin long positions on this particular exchange shot into new all-time highs above the previous all-time high. And it's really interesting to see how accurate these long positions were, because obviously during that time in the market where these long positions were at all-time highs, betting on the Bitcoin price going up, that was basically happening as the Bitcoin price was bottoming out, getting ready for its next bullish move. And if you're going back further on the chart, looking at the time before that, where these Bitcoin long positions on this exchange were at all-time high levels, that was during December 2019, and at that time in the market, we were at least a short-term bottom for Bitcoin, and just around the corner was a 60% pump in the Bitcoin price before we obviously experienced that March 2020 crash. And now getting into the Ethereum part of this video, this right here is the weekly Ethereum to US dollar chart, and if you're looking at the weekly Ethereum RSI, we have now confirmed one weekly candle close with the RSI under a value of 30, which means oversold. And obviously, ever since we got the weekly candle close around 1 day ago, the weekly Ethereum RSI has dropped even lower into oversold territories. In fact, right now at the time of recording this video, it's sitting at around 27.5. And just to put that into perspective, right at the bottom of the 2018 bear market, we saw the weekly Ethereum RSI at a value of 27.93, so just under 28. And once again, right now we're at 27.4. So technically speaking, according to the weekly Ethereum RSI, right now Ethereum is the most oversold it has ever been in its entire history. And now it is important to keep in mind that this right here is not a short-term signal. This is for the much longer term, talking about multiple months, if not years from now. Because once again, even though the weekly Ethereum RSI is currently the lowest it's ever been before, we've only seen one weekly candle close in oversold territories at the time of recording this video. And if you're looking at what happened at the end of the 2018 bear market, we actually saw 4 separate weekly candle closes in oversold territories. And so basically after that first weekly candle close in oversold territories, we still had another 3 more weeks before then we hit the bottom for the bear market, which is why this right here is not a short-term signal. This is really looking at the next few months at a minimum, but ideally the next few years. And also what is really interesting is if you're taking a look at the Ethereum short positions on the Bitfinex exchange, right now they have sunken to all-time low levels, which basically means the whales on this exchange, after closing over $300 million worth of Ethereum short positions, see very limited downside price action and risk of more upside price action, because of course if you're in a short position, upside price action is the risk. And right now, simply based on these extremely low levels of short positions, once again, they see the most amount of risk of more upside price action and very limited downside price action. And in fact, if you look at these Ethereum short positions compared to the Ethereum price action here on the weekly chart, the previous all-time low in these Ethereum short positions was at the very end of 2019, entering into early 2020, just before we experienced a decent pump in the price of Ethereum. In fact, that pump in the price of Ethereum was around 147%, when these short positions were at these insanely low levels. And if you're looking at some other times in the market where these short positions were at some very low levels, that was right around September, October 2020, as we experienced some short-term bearish price action, but just before we experienced more bullish price action. And also in this massive correction that we saw in the middle of last year, we saw these short positions at these very low levels. So on top of the fact that Ethereum, according to the weekly Ethereum RSI, is currently more oversold than it's ever been before, we're also seeing the least amount amount of whales short Ethereum looking on the Bitfinex exchange than we've ever seen before. And considering the fact that here on the 6-hour Ethereum chart, Ethereum hit my price target at around 1.4k, but well and truly surpassed that price target down towards around 1.2k. What are some other levels of support to pay attention to? And well, for that, I'll be looking at our Fibonacci retracement tool here on the weekly Ethereum chart, drawn from the March 2020 low up to the all-time high for Ethereum, and that places the second most important Fibonacci level, which is the 38.2% Fibonacci level, at around 1.1k approximately. And a very similar thing can be said about Ethereum versus Bitcoin here on the weekly chart. We have the 38.2% Fibonacci level coming in at around 0.046 Bitcoin per Ethereum, and so far we've gotten pretty close to that price target that I set a while ago. And right now on the weekly Ethereum versus Bitcoin chart, we are forming a wick showing some short-term bullish pressure, but keep in mind the bearish trend on the larger timeframes is still very much intact for Ethereum versus Bitcoin. So as of right now, when it comes to my personal crypto investing portfolio, I'm certainly heavier into Bitcoin compared to Ethereum, as I mentioned a long time ago here on the channel publicly. And of course, I'm extremely light in altcoins. I'm holding almost no altcoins at all. And this is due to the fact that the Bitcoin dominance is looking quite strong here on the weekly chart. But right now in the shorter term, the Bitcoin dominance is seeing a bit of a small rejection from this range of resistance, which was sitting at around 48% approximately. But keep in mind, the Bitcoin dominance played out something very similar to this back around the middle of 2018 during that previous bear market. But within just a few weeks later, the Bitcoin dominance eventually pushed above that range of resistance, which was very bearish compared to altcoins versus Bitcoin, because Bitcoin was reclaiming its dominance over the crypto market. And in case you're new to the crypto world, this type of thing is very normal during a bearish time in the market. It's very normal for altcoins to underperform against Bitcoin, and for Bitcoin to hold up a lot better than the majority of altcoins out there, which is why I'm extremely light on altcoins and heavier into Bitcoin. And now talking about what's been happening with Celsius, because within the last 24 hours, Celsius has actually paused all withdrawals, and also they've paused swaps within their accounts. And straight away, what this tells us is a lot of people have been trying to withdraw their funds from Celsius, to the point where either one or two things is potentially happening. Either they're low on liquidity and they need to try and sell some of their other assets in order to gather more liquidity to open up withdrawals again, which is the scenario we should all be hoping for. But the other scenario is Celsius potentially running low on funds altogether, not just low on liquidity. And obviously, it's not like I work at Celsius, so unfortunately, I don't have any inside information. I can only share already public information. But if you do a little bit more digging, beyond the fact that people are just trying to withdraw funds from Celsius and they might be low on liquidity, another couple of reasons that could potentially prove to be some major issues for Celsius moving forward is that, first of all, Celsius potentially own a lot of liquid staked Ethereum. And you might be wondering, what is that? And basically, it's a liquid version of staked Ethereum, because even though Ethereum is still proof of work as of right now and not proof of stake, you can still actually stake your Ethereum under the ETH 2.0 contract. But if you do that, you essentially lock up that Ethereum until the Ethereum merge happens, merging Ethereum from proof of work to proof of stake, also known as Ethereum 2.0. But then there's what's called liquid staked Ethereum, which is basically an Ethereum contract that acts as if it's staked Ethereum, but instead it's of course liquid, so you can move it around. It's not locked up. And that liquid staked Ethereum contract is meant to have a 1-to-1 peg to the price of Ethereum. But recently, if you're looking at this 1-to-1 peg for liquid staked Ethereum versus the price of Ethereum, over the past few days, it has been beginning to lose its 1-to-1 peg. And in fact, right now at the time of recording this video, one liquid staked Ethereum is currently worth 0.96 Ethereum. So basically, if someone had, let's just say, 100,000 Ethereum and wanted to have that in liquid staked Ethereum to earn some of that interest, then right now at current valuations, that liquid staked Ethereum would be worth only around 96,000 Ethereum, which is of course a 4,000 Ethereum loss in that scenario based on this 1-to-1 peg being lost. So if Celsius does actually hold a lot of liquid staked Ethereum and this peg gets even worse, then that is not good for Celsius. And also another potential issue for Celsius is their massive Oasis Vault loan, which is basically a loan Celsius has, and there's around $500 million worth of wrapped Bitcoin locked up as collateral in this loan, and their liquidation price for this $500 million worth of wrapped Bitcoin is only at around 18.3k. And now earlier, before they locked withdrawals, this was actually at a higher liquidation price. It was around 22 to 23,000. But then what happened is Celsius stopped all withdrawals and then started adding tens of millions of dollars worth of wrapped Bitcoin into this collateral to lower their liquidation price. And the lower the liquidation price, the better. But of course, this comes at a cost, because in order to lower that liquidation price, you need to add more and more collateral to this loan. So basically, if we see the Bitcoin price keep on dropping lower and lower, then expect Celsius to try and add more and more collateral to this loan in order to continue to lower this liquidation price. And it's very likely that while this is happening, withdrawals would most likely stay close. But of course, I do not know that for sure. I do not work at Celsius. But then if we see a good recovery in the Bitcoin price back to the upside, Celsius in that case could afford to take some money back out of this loan and raise that liquidation price if the Bitcoin price goes up. And of course, in that case, they would have more liquidity to support more withdrawals and potentially open up withdrawals again. But once again, I do not know that for sure. I do not work for Celsius. This is just simply looking at all public information that I can see. And if you appreciate these videos, please make sure to leave a like down below and subscribe to this channel if you're new for more important videos just like this one. And make sure to watch this video popping up right here on your screen if you want to know how to make money in crypto, whether or not prices are going up or down. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.